Yeah, Stevie, I got your email. I'll get you today. All right, who's here? Who's alive? You guys ready? I guess I should tie my shoelaces. This is serious business. All right. It looks like there's like a 30-second lag, even though we're on like super fast, super low latency. Very interesting. Google doesn't have enough money. All right. So anyways, let me mark this. Look at my mic. What's going on with the mic? Yeah, I like my mic tight. Let's see. It was like turning into my face. All right, hey, so let me mark this as the beginning. Don't know why I swallowed a fly. All right, cool. So it is 8 o'clock in the a.m. New York. It is 232021. Star date. Star date 02032021. 321, let's get on with it. Go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. Yeah, I did notice someone said here that the stream pauses for like a half a second every so often. I just noticed it did that, so I don't know what's going on. I don't think it's me. Maybe it's me. I don't think so, but it might be. So anyways, apologize for that. Well, regardless, welcome to Forex.Today. If you're here to talk about technical analysis, fundamental analysis, trader psychology, macroeconomics, and just trading, markets, finance, economics, history, and maybe some fun, and a rap tune or two, then you are in totally the right place. My name is Wayne McDonald. I will be your guide on today's journey. Please buckle your seats. Keep your hands inside of the rails. It's Wednesday, which means we are going to have another dumb prediction called ADP. So we'll see if we'll get some volatility out of that, maybe a scalping opportunity. And then, of course, later in the week, on Friday, is non-farm payroll. So that's the big epicenter of what we are doing. So in any case, ask questions, get involved. I'll do my best to address those questions. If I don't get to them, why don't you consider subscribing to the channel so that maybe I can address your question tomorrow. Very cool. I also recommend that you take notes. You might ask a quick question. I might give a 20-minute answer. Therefore, take notes. And then when the video or when the stream is done and you have access to the recording, you should document what you learned. Post your notes in the comment section below the video. I'd like to thank Traders Way as being part of our community as well. We're traders. They're a broker. Traders need brokers. Brokers need traders. So it's a symbiotic relationship. So how are they going to lure you over to trading on their platform? Well, how about competitive fees, quick execution, great swaps, world-class customer service? Or how about just the idea that they're like, they want you to succeed and they're already investing into your education? Think about that. Maybe that's the type of partner you want in your successful Forex trading business. So give Traders Way the opportunity to earn your loyalty and respect by visiting tradersway.com and open up a demo account. I think you'll be pleasantly surprised. They've earned my respect. Give them an opportunity to earn yours. Here we are. This is where we like to start. These are the indices. Swissy week. Dollar still strong. Okay. Oh, right on, Gordon. Yeah, it was just, it wasn't set up to do what happened. And so, yeah, it's a bit of a cluster F, but we got it all figured out. And yes, thank you for Ryan for putting time in. So that's good, right? So I'm glad you're happy. Glad I'm happy. I'm glad he's happy. Glad we're alive. Okay, so I want to get back to this thing that I've been sharing with you for a little bit. And that is, because I expected the dollar to be strong, I declared that euro would be weak. Really strange, right? Very, very strange. What about all this central banking policy? And what about reaction to COVID and not COVID and this and that and the other thing? Like, all the forces in the world are acting on all these currencies. Could it be so simple that the euro is simply the opposite value of the dollar and the dollar is controlled by, and we, right? I don't know. It's just amazing, isn't it? Not bad coffee. It's better when it's not ripper hot. So wouldn't it just be terrible if it's at least somewhat true? Euro is simply weak because dollar is strong, and then when dollar decides to be weak again, and it will, in the near future, it'll weaken again. And guess what? Euro will be strong. You're like, what? So, whatever. So maybe unbelievably lucky. So like pound is strong, Kiwi is strong, CAD is strong, yen is strong, dollar is strong, Aussie is neutral, and I'm selling euro. The one thing that's weak besides Swiss franc. But Swiss franc is a funding currency, so I look at that separately. But the one thing that's weak is the one thing that I'm selling. It's weird, right? Right? Isn't that weird? And I'm doing it in a strange way. So I crossed 800 pips about a half an hour ago. Looks like it gave some back. So we're now 770 pips selling euro. Very interesting, very lucky. Now, again, I'm trading against an exotic, which isn't actually the right thing to be doing in this mode. So if you go back to the videos of last week and the week before, and probably even the week before that, I was explaining how it's actually the in-between trade and that there are better trades that are being born. Okay? And that will prove not to be the best. But I wasn't trying to prove the best. I was trying to prove the dynamic forces between the euro, the dollar, and risk on, risk off seasonality. So cool. Is that right, Johnny? What was the number? Is it over 3 now? This has been selling euro since the week opened. Yeah, and we covered that, I think, on Monday, where they opened at pivots, right? The proper pivots for all of that. Okay, so one way to do it is to pound is actually the least good one, but we could look at this one and revisit the numbers. So we're hitting our target for the week, which we discussed back on Monday. Remember doing these vertical lines? And then we already have next week's plan outlined and next week's target. And then the week after that, we have that target. Very cool, right? Isn't that nice to be able to go out 2 or 3 weeks in advance? It's helpful in the planning, right? The planning is helpful for the trading, right? So we're looking at this, okay? So we're essentially done this week, which is actually normal on an NFP week. Then here's next week and next week's target, and therefore we'll be selling this price 2 weeks from now and head down a little bit further. And then we'll talk about maybe buying all of this back in March. Okay? Cool. Right? So this week is now done. Okay? You'll say, well, Wayne, it's only Wednesday. What if? That's not the point. That's not how you trade. It's not about what ifs. It's about what is probable. What is probable and what has been planned is based on recent market conditions. You were supposed to be a seller on Sunday afternoon. Let's go back to Sunday afternoon, right in here. So you were supposed to be short 121, just below 121.50. Okay, 121.25. Okay, whatever. And based on that, our target was I can't even see it. It's not that one. Can't quite see it. 120, I guess almost exactly 120. Yeah. I guess that's what that is. Aggressive 120 on the nose. So we are now 14 pips away from the target you should have set last week. Well, front run would have got you 121.50. That's the front run. Here's the open. Okay? So if you're simply a swing trader, doing nothing complicated, just following your bias and trading at the right time, you are now 12 pips away from the target you set actually last week. Okay? And you should be wrapping up. And that's that. Maybe you don't even participate in the volatility that may or may not happen on Friday's non-farm payroll. So you're done for the week. You're just done. Okay, that's all. Now, what if maybe it goes further? Irrelevant. Okay? So now we got this right? Now we got this to plan out. And you might just skip, take Thursday off, take Friday off. You don't have to work Saturday. Most of Sunday you don't have to take off. Sunday afternoon, right? Sunday afternoon when the market opens, you'll be here. And you'll be ready to sell it off the psych level. Okay? Or you wait for non-farm payrolls to come out on Friday and it pushes $0 up, in which you are preparing to sell around 120.50. Okay? So the question here is, how do I scalp into a swing position? Okay, so let's say it's non-farm payrolls on Friday, and I already know this area, this zone. I already know I want to sell it. So now what I do is we get here and I go to a 15-minute chart. And let's pretend it's Friday. And the news comes out and we get some volatility. And then it does this. And in this zone here, I've already identified that I want to sell it. It could be Tuesday, it could be Monday, it could be Friday. So we get this rally up on euro dollar on non-farm payrolls. We hit the psychological level of 1.2050. Oh, so good. And you drop into a 5-minute chart, let's say, and you trade something like this. But it occurs here. You sell it, you drop your stop, and you're already in for next week. Okay. Theta says, if I open the trade and for 3 days it's not moving, should I get out? Why? It's not moving. Okay. Now, thank you. Oh, thank you for the headline, $1.74. Johnny says 2.75 was the remittance. Yeah. All right. Boo, 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 boo. Okay. So anyways, that's how you do it. You can't scalp into a swing unless you have a swing plan. So anyways, yen. Okay. So here we are. We have the mediocrity planned out on the charts. Okay. We can see the mediocrity, right? I took a trade here on Sunday at the open. So I was long here. And now I'm not long here. Okay. I have another opportunity there, but I'm going to wait for the higher high and catch the next higher low. Therefore, if it wimps out here, I'm not in it anyways. Okay. And I don't, I was pretty clear last week setting it up, and I was pretty clear on Monday when we talked about it. I don't even expect this to go up. But I took a shot on that. That's it. Okay, so I lost 3 pips. Okay. So the next question is, do I keep buying these? Yeah, I'll wait for something like this. Because I know I have my bias, my long-term bias. It doesn't mean anything for this week or even this month because of seasonality and such. But I know as a bull, I have to buy a higher high, higher low. And I have to buy it at a psych level with the central pivot at the market open. I mean, I just have to. There's like, if I don't do that, then I'm not a trader. Like, what are you doing if you didn't trade that, right? Like, that's the whole thing. I mean, there you go. Even though I don't expect it to work out, I still have to do it. I mean, my God. And now that it's failed, which isn't surprising, now I'm playing it like a range. And of course, I know the actual range here is this to this. Okay. So I took my shot. It was the right time at the right price for the right reason. And still didn't expect it to work out, which just didn't work out. So I guess that's right. And now I wait. Because it's not the same, is what I'm trying to get to. Okay? Simply blindly buying it because you're a bull is not something that I've ever recommended. Remember, you got to have the market conditions as well as the bias. And so, with the higher high, higher low central pivot at a psych level, okay, I can take that shot. Failure, walk. Okay? Walk. Because the best one, of course, is breakout, pullback. Okay? So, yeah. There you go. I did the same on Kiwi and lost 3 pips there. Okay. And yeah, I guess I don't know what I did there then. I must have mismanaged the stop. Oh. Huh. Interesting. I don't remember. I don't remember this one. I don't know why I got stopped out. It must have been like literally the spread took me out overnight or something. Interesting. Should be on it. I must have bought it out of position then. I don't remember, but even then I'd have to wait for the 21. So I don't remember how this one went down. I remember I was on it, and now I'm not on it, so too bad. It must have been this move here. Don't remember, don't call, doesn't even matter. Layla says, why is the dollar behaving different when it comes to exotics and the major currencies? I don't know that it is. How do you see it acting as different? I guess let's go back. Let me make sure I'm looking at it with my eyes and not my brain. So you're suggesting, like, if you're looking at Rand, why is the dollar weak versus Rand and strong versus those majors? Oh, now I looked at your question. Yeah. No. It's just the Rand is stronger. Okay, but I stayed away from this one, even though I set it up, because I was trying to explain the intricacies between euro this time of year and dollar. So I took the same trade on this and did much better than the other one, but that's what I was trying to show you. So you have to go back to like last week and the week before, where I explained that in greater detail. Well, again, peso is based on the remittance, so we expect that this week. We expect that. That's the thing. So now you got to do the remittance trade, Lalo. Okay? So look at this. I marked it the first day. That's the top. Okay? So now you got to watch the remittance. So this is expected ahead of time. Before it even happened, it's expected. Okay? So that's not a dollar issue. That's a peso issue. Okay? So you have to find the video on YouTube under the FX Bootcamp channel, how to trade the Mexican peso and why it works, I think is what it's called. How to trade the peso and why it works. Here we go.
Free, of course. But I had noticed the peso tended to get strong.
Okay, so you have to follow that. Copy. I can see clearly now that Wayne is gone. All right. And look at that, my Forex.Today coffee mug. It's interesting that this other stuff is there. I got rid of it, actually. I don't know why it's still there. I'll have to double check the account. Looks like they've popped it back up. I bought this $50 sweatshirt and it sucked. It was unbelievably bad quality. So I removed it, but apparently it's back up there, so I'll have to figure that out. So be forewarned. So there you go. And this is not a fundamental play. This is not a dollar play. This is just simply remittance. Okay? It's just short-term flow. It's a flow trade. No, it's not risk on. Okay, not dollar. You guys, you're mixing up very generic ideas with very specific concepts. So yes, the dollar is generally weak this year, but it's not supposed to be right now. It's not supposed to be. Okay? So go back to watch all the videos in November and December where I tell you the dollar is going to be strong in January. We talk about it like the dollar could be strong for as much as like 12 weeks. That in week 1 and week 2, the dollar is going to be strong. Week 3, there's going to be a false rally, meaning dollar weakness. Then in week 4, week 5, week 6, it's going to be strong again. I mean, I'm very, very specific, and I did it last year. I did it the year before that. I did it the year before that, and did it the year before that. So you're mixing up concepts where the macro, let's say the monetary policy of the Fed will weaken the dollar. Yeah, that's true. But there are other forces in play as well, which means based on things like taxation, reinvestment, rebalancing, taxation. I don't know if I said taxation yet, but there are things at play right now that impact that not necessarily being true in the moment, but it will be once again soon. Okay? Okay? So I am still fundamentally bearish on the US dollar, but that's why I'm not buying it right now, even though we know it's going to be strong. I don't want to confuse things on this coaching account by me doing the opposite, so I'm trying to show you how to do other things in this period. This is why, for example, I'm shorting Euro Rand. I'm trying to show you I'm not buying dollar because I'm fundamentally bearish. Now, of course, I could be. But how I can take that same idea, the same concept of dollar is going to be strong right now, therefore I'm going to sell the euro, and then I'm going to sell the euro on a rand to show you that I'm still macroeconomically focused on global expansion. Okay? Isn't that interesting? I'm trying to show you these concepts that the dollar's strong, but that's irrelevant to the macro. We expect it to be strong because this is part of the dollar's personality. And therefore, I'm carrying out my same fundamental bias on a completely different setup, but that still makes short-term to medium-term sense. In this case, rand, right? So, cool. Okay? Okay, so this one's up almost 300 for the week, and this was 2 weeks ago, and that one's up almost 500. Cool. Nice. Just to show you, it's the same, only different. It's the same fundamentally, okay? And also compare and contrast this to, I want to sell USD Rand, but I know this is not the right time, so it made a few pips. You're a little bit profitable here, but you're extraordinarily profitable here, and that's why I took that one, because I predicted that before it happened, and we even talked about why I didn't sell the USD ZAR, instead traded the Euro ZAR. You see? Now hopefully the hammers are starting to click. You're like, oh my God, that's true. He did do that. I did compare and contrast the two and showed you why, even though I'm fundamentally bearish on the US dollar, I went over and I did that one instead. And at this time, they were the same. Now they're radically different, but we had talked about why that would happen before it happened. Cool. Coolio. Okay? And remember, now that it's happened, it's probably done, or not done, but definitely too late. All right, so let's go to some commodities. Oh, Jaime says, excuse me to come back. Wasn't it the plan to buy at 120? Maybe. Okay, let's go back to that. That's a good question. Where is that one? I guess this one. Buy it at 120. Well, you could. Okay, let's do this one. You could. Okay, you could. It's possible. It's plausible. It's okay to set that up. Okay? Could you? Yes. Is it the plan? The issue I have with it is we're, I'd say, at least 4 weeks early. But it's okay because it could be different this year. I mean, that's normal. So So I do want to be a buyer of this pair. So I have to be clear with that. I think it's the right price. I get that. But I think what I need is I need for it to turn bullish before I get on it. Okay, Jaime? So it's not necessarily a plan to buy it. And by the way, if you see me draw it up and down, the up isn't necessarily a buy. I'm predicting a bounce and then bearishness. Now, why would I predict bearishness? Well, because technically speaking, even statistically speaking, it is bearish. So I could at least wait for the M, right, to be positive, a positive number. So again, in the equation of the math here, what we're looking at is y equals mx plus b. And this m, right, m should be greater than 0. Right now, m is less than 0. So therefore, I'm going to expect this to continue forever and ever and ever until the data set changes and produces more up. So we would look at it like this. And then I'm happy. Okay? But right now we don't have that in the data set. Yeah, this could be the bounce. The 120 could be it. But I'm not buying it because of that. I need to buy in an uptrend. And I know the longer term uptrend is still positive. Okay, that's great. But the shorter one is not. So I could at least wait for a confluence of short, medium, and longer term trends to kind of move toward each other. Okay? Correct, Theta, yes. Just because I'm predicting based on macroeconomics, euro dollar will be up at the end of the year, that's only a bias. Okay? So anyone in the swing trading course, for example, knows the first thing we ask is, what do we know? I don't say, are you bullish or bearish? Because you already know that. That's not analysis anymore. That's your bias. Okay, great. So what do we know when we look at the market now? We use technical analysis to analyze. So for example, what do we know? Do we know it's going to move up here or down here? No, but we know that the market conditions are currently bearish. So even though I'm a bull, I could say, well, I have a couple of choices. 1, do nothing, or 2, very, 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 very conservatively, with the smallest amount of risk possible, I could try to tiptoe into this because I'm so certain on the bullishness. But I'll tell you, I think we're like somewhere between 3 and 6 weeks early. So I don't really want to buy it yet, but I get the concept of buying it at 120. I get it. So if it did this, I would change my behavior, because now I have a double bottom with a higher high, higher low, and I'm a bull. So I'm like, okay, I'll kick it off the 120. So I'd probably be a buyer at a pullback. Remember, I buy red candles in an uptrend, not candles in a downtrend. Okay? Make sure you note that. So once I get a higher high, I can buy a higher low at a roll reversal off of 120.50 after a double bottom at 120. So I might be like 4 days after the fact. That might be a whole week after it's reversed. But don't worry about that, son, because I will then continue to buy dips in now a market that is technically bullish, because that's what I fundamentally think anyways. So I look at this chart and I tell myself, be cautious, be awake, be aware. Okay, be aware. We saw it coming. It's happening. Great, great, great. I also see it eventually heading the other way. It is foretold. So now I have to verify. And right now I cannot verify that that's going to happen. Therefore, I don't want to take the risk. But I understand the 120. Okay? But I don't want to buy first drops, first tests of prices. Okay? You have to always understand that. So if I say, oh, this would be an interesting place to buy, it would be, but what are you missing now? All we know is there's an obvious level of support. It's a giant psych level. Well, I have to have a reversal pattern first. Okay? So I'd belong here. Maybe here, but certainly not there. Okay? I buy red candles. You're missing a point, though. I buy red candles in an uptrend. I don't buy red candles in a downtrend. Okay? Don't forget the trend. The trend confirms the bias, because the trend is created from the bias. Okay? Remember, I'm not eager to get in. That's not my job. I don't want to be the first one in. I've always said that there's no first mover advantage, only a first mover disadvantage. I'm not trying to be the best. I'm not trying to be the smartest. I'm not trying to have the most. I'd like to have the least risk possible. Okay, I'm trying to get the low-hanging fruit. In fact, in my book, I talk about I don't want to climb the tree to get the bananas. And I certainly don't want to fight the 800-pound gorilla at the base of the tree. In fact, I'm going to wait for that 800-pound gorilla to fall asleep, right? I'm going to pick up the bananas that he's dropped. I'm a cheeky little monkey where I go in there, and while he's sleeping, I'll take a couple of bananas out of his arms and run away quickly. Right? I don't want to be the 800-pound gorilla. So we live off the greed and the sloth of hedge funds, otherwise known as the 800-pound gorilla. But most of this is predictable based on your ability to be an Illuminati. That sounds difficult. Well, it is difficult. But what is it? Veritas is knowledge. Veritas means the truth. It's just knowledge. It's only knowledge. That's it. So once you know it, it comes down to then, are you illuminated from the knowledge? You have the truth. Now what are you going to do? So to me, the truth is euro-dollar is going to go up. I'm 100% convinced of it. Not today. But when market conditions are favorable, I'm going to be quite confident in what I do. And my behavior will probably be reflected from my confidence. Okay, my behavior will reflect my confidence. Right now, I don't have the confidence. I also have this general idea that we're 5 or 6 weeks too early. Doesn't mean I can't take the shot. That's what I was trying to show you. But remember, on the Aussie yen, it was still, right? The Aussie yen was still technically set up for a trade. It wasn't that I'm a bull, and it wasn't even that I was at a central pivot. You guys have to understand, I'm a bull. It was at a central pivot, but I bought a dip after a higher high. I mean, there's a lot going on there, and I still didn't think it wouldn't work. Therefore, I didn't risk much, and I kept my stop close, and I managed it as if I wasn't convinced. And it was no big deal. I had a chance to make money. I lost 3 pips. Good, fine, good, fine. I wasn't afraid, but I didn't gamble either. Okay? Cool, right? Do you guys love this? I love this. I love this. Okay? So for all the YouTubers that are looking for a trade, when's he going to put me into a trade? Well, between now and Tuesday, you should be short around here. And there's our target for next week. So you'll probably squeeze out, if it works out, about 150 pips is what the chart tells me. Does the chart tell me to sell now? No. If you wanted I guess if you wanted to trade it, you'd be scalping it up. But I don't like that either, but you can do whatever you want. Okay? Okay, now what? Does that look good to you? That's where you want to make your fame and your fortune? What time frame are you looking at? This one? Like, it's just so funny. Yeah. Okay, cool. So let's go back to the commodities. Again, we're talking about tomorrow and the rest of the week. So here's your Bitcoin. Okay, Monday at the market open. You're a buyer. Okay, Monday afternoon, you get a front run for Tuesday. Now it's Wednesday, and you might already be late for tomorrow's trade. Tomorrow's trade has a target here in which I would caution you of the double top. In fact, right, there's a lot going on in that price. Now, how about other things? So we talked about a bottom, we talked about a higher high, and then we talked about a higher low at a roll reversal, which is defined here. So if on Sunday afternoon you bought it, you're done for the entire week, maybe the entire month. Do you understand that? Okay? That's it. Remember yesterday I talked about the next change in your career is not trading more or trading better or trading bigger lot sizes for bigger money. I said your real breakthrough is learning how to have the courage and the discipline to let your winners run. That's a great example here. You might be day trading Bitcoin long and did really well here. Maybe you're in it all day, but you might be in it for the rest of the month. Okay? Okay? All of this is all plausible, okay? That you just hold, okay? So your stop is down here. Let's delete this out now, right? Your stop is down here somewhere, and you made it through the first day, and after the second day, maybe you just move your stop to -3. Do you go to here, or do you go to 40,000, or do you go to 50,000? I don't know. Okay. So I'm preaching that you become more conservative, teach yourself things like doing better analysis and having more discipline to carry it out. I want you to keep your risk low, your stops small, and I want you to have the courage and the strength to let your winners run, because I think your trading is worth more if you take my advice. It will have more worth. Not because you got a better price. To me, whether you're long here or here or here is irrelevant. They're all just different trades, but that you've done enough analysis that you believe this is going a certain direction for a certain reason. It's from your analysis. It's from your decision-making process. All the data you gathered tell you all this to be true. Then you wait for market conditions to be favorable, and then you take a trade, and then you manage the risk over the short run. And then as the long run takes over, you let it do its thing, the thing that your analysis predicted. It's not that you're right. It's that when you are right, you get out of your own way. Get out of your own way. I think that's a U2 song. Yeah, yeah, yeah. So anyways, that's where your worth should be made, is from your analysis and decision-making process. Okay? David asks a great question. He says, when I mean let the trade run, does it mean you get out of the trade and get back in? No. What does it exactly mean? It exactly means you let it run. You don't exit. Now, over a period of time, you will get better at analyzing when you should. So I will change my answer now to reflect your question, David. You absolutely, you can do that as well. Okay? Most retail traders, when they begin, they don't have any fundamental analysis, and their technical analysis is either weak or poor, right? So I'm trying to help out with the decision-making process for newer traders, and I'm trying to preach a message that if you learn about monetary policy and macroeconomics, you can make decisions from this knowledge on trend. And therefore, then you can filter through all the technical noise with your fundamental filter. So you can say things like, I expect dollar to get strong or weak, and therefore, based on what you want to do, you can then use technicals to get in, right? So like if I want Bitcoin to go up, for example, the choices that you'll have in the future are going to be based on macroeconomics and seasonality and all these other things that come into play. Okay, so we'll say the let run at the very least means you go to at least the profit target. So many traders trade based on fear, and they're trying to make 25 or 50 pips at a time because they don't know where it's going to go. They don't even know why it's moving. There's no macro, there's no bias, there's no fundamental, there's no understanding of monetary policy, right? So I'm trying to say, at the very least, try to learn these things. Be more conservative in your planning. Lower your lot size to reduce your risk. These are all the messages I'm trying to get across. Lower your lot size. Take less risk. Plan more. And when you happen to be right, don't take small winners. Because there are things that we might call a universal truth. I don't know if you believe this or not, nor do you have to. So you have to ask yourself, do you believe that your winning trades should be bigger than your losing trades on average? If the answer is yes, I don't think you'll find, if you practice on a demo account, if you keep your stops tiny, that'll improve your trading. Like if you say, well, Wayne said my losses need to be smaller than my winners. My winners are not very big, so maybe I just move my stop 10 pips away. No, forget it. Forget it. You're going to get so unlucky so many times. There'll be a little bit of news. There'll be some weird price action. The spread will widen. You'll just have a bajillion losses. Okay? I'd rather you have a decent sized stop loss. 33 to 50, maybe even 100 pips away. Wow, that's crazy. Yes, lower your lot size. Make your trades smaller. Right? And therefore, you can learn how to let the winners run. So if your stop is 50 pips away, at the very least, look for trade setups so that you feel comfortable or at least worth 100, maybe 150. And that's where we have to get. Okay? That's where we have to get. But you guys might remember, I don't know, 2 years ago or something, I held a trade for 10 months. A trade we took together as a community, where we analyzed together. I popped the trade, and I sat on it for 10 months until I finally got stopped out. Just to show that you can. And then you're like, well, Wayne, what's the point? You didn't make any pips. No, but my internal rate of return on that trade was 1,000%. So I was also teaching carry trades. Okay. All right, cool. So long story short here, your ability to let it run can be interpreted many different ways. Should you do the pink line or should you do the blue line? Yes. Okay. Okay. You have to make that decision. Which one do you do? Or do you do them both? Yes. Okay. But if you haven't made a decision whether we're going to be here in a week or two, then you're not going to be able to make decisions. So like looking at Bitcoin on a 30-minute chart, right? I see that as it's technically bullish. So on this smaller time frame, I could be day trading this up, which I indicated to you an hour ago, so 2 candles ago, that this would be a buy zone. Not today's buy zone. This is today's buy zone. This one is today. Today's going to be the day. Gonna burn back to you. Okay? This is tomorrow. And you should already be long. So what I mean, like, I'm not interested in today. Today's done. I'm interested in tomorrow. Okay? So, here at the New York Open, you could possibly have bought in Bitcoin, and you're going for 37.77. If you only have the strength to get out of your own way. Okay? But if you show up like, hey, should we be buying Bitcoin today or selling? You will be destroyed. Thank you for the liquidity. I appreciate you. Mm-hmm. Coolio. There's that big silly, the big silly silver trade we talked about on Monday, or whenever that was. And all I knew was this was the worst place to buy. And anyone that thinks this is a GameStop, remember on Monday, Bloomberg was really pushing it. Like, it's the new GameStop. It's the new social media frenzy trade. And I'm like, that is stupid. You'd be an idiot to buy it up here. Thank God I'm opinionated. Thank God I'm a country boy. Mama, don't let your babies grow up to be traders. All right. Yeah. Okay. Good. Fine. Fine. Commodity done. Exotics done. We did that. Yeah. I think we're done. I think that's it. What else are we going to talk about? I think we nailed it. Okay. WTI woke up. Beautiful trading. Beautiful trading. Very nice. Is silver indicate gold? No. Okay. I think I missed a... Wayne, when you are looking at your currency and strengths in the morning... yes, CJ, that's in the at metatraders.com. I only do this for you guys. For the last 20 years, I do things like scanning, and I'll say pound stronger than dollar, pound stronger than euro, okay, pound stronger than or the same as the Noki, pound stronger than the Swiss. Pound and Aussie, well, they're all different time frames, but pound stronger than the Aussie. So the pound is generally strong. Noki is generally strong. Okay, remember we're trading Noki in the direction of Brent. So that's why Noki is strong, if you guys remember that trade. So I look at this and I make my own decisions. A lot of people have trouble. It takes them 2 hours to do relative strength, and it takes me 2 seconds, only because I've been doing it a long time. So to try to start your mind off correct, what I do is I use this system so that I can tell you right away, here's the dollar strength we've been talking about for 3 weeks. Actually, 16 weeks. Okay? And we nailed it within 2 days of accuracy. Okay? But actually, I wasn't predicting the day. I was predicting the week, the first week of January. So since then, boom, strong. Cool. And then it kind of sets the mind up, because a lot of you guys are, you come in and you say things like, let's trade, I don't know, pound kiwi. And I'm like, why would you trade pound kiwi? I always trade pound kiwi. I look at it like, that's the dumbest thing you could possibly do. Like, that's what you're doing today, trading pound Kiwi. You're like, what's wrong with pound Kiwi? Well, they're both strong. What the heck? Did you not analyze the market conditions? You're like, no, I always trade pound Kiwi. Well, okay, well, there you go. Okay? So that's why I do this, just so you get it. Like, if you're trading Kiwi dollar today, you don't understand what's going on. Okay? You just don't get it. You're like, you're not doing even the right kind of work. You didn't analyze the Kiwi. You didn't analyze the dollar. I don't know how you got there. Well, you'll say, oh, well, Wayne, the pivot point. Who cares? You're not even thinking properly. You have to analyze the market. The indicators are not really going to do it for you. So you got to go through and say, is the Kiwi strong or weak? Is the dollar strong or weak? They're both strong. Then don't do it. How about Kiwi Swissy? That would be better. How about Euro Kiwi? That would be better. So, like, you got to start out. You have to remember, everything we do is relative. You're supposed to be pairing up strong versus weak. You can do this based on relative strength, which is very short term. Over the last 24 hours, Kiwi's been strong, Euro's been weak. Is that going to be the same for tomorrow? Next month? Well, we don't know. It's not telling us the future. It's only telling us the past, and the past does not predict future results. It kind of looks like it does, but it doesn't. So therefore, we need to have another level of knowledge, and we call that fundamental analysis. And right, so that's global macroeconomics and trade impacting the each individual local economy and the flow of money. Sometimes the money is flowing to a country or away from it. That changes the value of the currency. And then from that, we can make generalized assumptions of the near future. And that's what a fundamental analysis is, where, like, fundamentally, I would like the dollar to weaken, and I would like to sell the dollar. I look at this and I say, but not today. No faux show. Right? Like, not today, bro. Not today. Today's not good for that, and it's not good for me today. I want to sell the dollar, but not today. Okay? Not today. And therefore, I might just survive another 24 hours. Okay? Is relative strength a matter of which time frame? Yes. Put it this way. If you want to scalp Kiwi Euro on the 1 minute chart, or if you want to swing trade the Euro Kiwi on a 4-hour chart, it matters. Okay? Especially because, think of it this way, Theta. I set up a 4-hour. I got it fundamentally set up, right, in my mind. Then I go to a 4-hour, and I analyze the market, and I say, okay, the market conditions are generally fine, and the price is about right. So then I drop into a smaller time frame, like an hour or 15 minute, and then I double check. Are we at a market open? I got a reasonable price, and the market conditions are generally favorable on a higher time frame. How are we doing now? How are we doing at the New York Open? Is this good? Am I at support? Is it giving me technical patterns that confirm bullish bias even on this time frame? And if it's true, because I see a double bottom with a higher high, then I drop into a 5-minute chart and I say, I want to buy a 5-minute pullback, ideally at the roll reversal. So you're like, well, does relative strength on any of these time frames matter? Yeah, all of them. Because it'll either set up on the small time frame or it won't. But you remember, I'm not necessarily making decisions because of this, right? I don't say, okay, I guess today I should trade Euro Kiwi. That's how I traded 20 years ago, before charts even existed. Think about that. My first trading platform, it was FXCM, right? The first trading platform I had no charts. So I looked at overnight data. I looked at volatility, very similar to this. And I did manual calculations on an Excel spreadsheet. And after an hour worth of work, I would say, I want to trade Euro Kiwi today. And it would tell me something like this, like Euro's generally weak, because I would compare Euro versus everything. And then I would compare Kiwi versus everything and everything versus everything else. So I literally handmade one of these setups. Now, I didn't look at lines, I looked at data. And I said, based on what's happened over the last 24 hours or so, I'm most favorable being long Kiwi versus Euro. And much of the time it worked out fine, and some of the time it completely failed. Why? It's not making decisions looking forward. It's only reporting to me what has already happened. So I got lucky when the trend carried it a little further, but when the trend came to an end, I didn't do well. I lost. And then it made me think, well, I would like to better be able to understand why Euro Kiwi and how far can it go. Is it for the next 2 hours or is it the next 2 months? And then I grew and I matured as a trader. Okay? Cool. Thank you for being on my team. Thank you for clicking the like button. Thank you for subscribing. Thank you for being a client to Trader's Way. Thank you for being you. Thank you for providing positive energy. And I'll see you tomorrow. Cheers.